The Infinite Banking Concept Cost Recovery Strategy, Video 3. Now this is the life insurance illustration we're using to fund a bank for the business owner in the scenario I gave you. It's a 35-year-old male. He's depositing $50,000 into his policy, his bank. And in year 6, you see it going down to $18,000, and then in year 16 going down to $17,000. These are the guaranteed cash values. These are the cash values with dividends. You see them going up every year. And you see a death benefit. We need to have a death benefit to meet IRS guidelines. I'll explain this a little bit more in detail in a couple of minutes. But I want you to look at something very important here, folks. Now, here's where you really need to concentrate, because this is incredible. Look at the cash value here at the end of year 5. It's $232,000. Remember that number, $232,000, just a little over $232,000. Now let's go back a couple of slides and look at end of year 5 here. It's $243,000. It's more money. Why is it more money here when we're using the life insurance policy you just looked at? I'm going to tell you that in a minute. Let's go back. Look at the cash value here at the end of year 10, $367,000 and some change. Let's go back to year 10, $367,000 here. Year 10, $393,000. So you've grown even more. Why is that? Hold on. Let's just go ahead and take it all the way down to the last year, 20 years. You have $738,000 and some change. $738,000. Let's go back. End of year 20, you have $839,000. It's a huge difference. Why is that, folks? Well, the only difference between this illustration and this illustration is that here you're loaning the money and receiving interest payments. Do you get that, folks? The only difference between the two scenarios is here you're loaning money out and receiving interest payments. That creates extra wealth. We designed this policy specifically to do this, using the paid up additions rider. This is what these gurus don't understand about whole life and how flexible it can be. When you design it specifically to act as a bank, the more you lend and receive in interest payments, the more wealth you will create. You can see it here clearly in this illustration. So that again goes to the flexibility. Remember, this is wealth for you. This is tax-free wealth that you can use in your future. Now just imagine, folks, imagine if you, the business owner, continued to contribute $50,000 a year instead of dropping it down to 18 and then to 17. What if you would have contributed an extra $480,000, what you saved in cash flow, but just instead decided to continue to deposit that? How would these numbers look? How much more interest would you have earned? And how much more tax-free wealth would you have here in this column? It'd be well into the 7 figures. All tax-free money. Again, these cash values go up. You can use them for anything you want. Here in this end of year 12, you have $462,000. You're only borrowing $50,000. You have over $400,000 available. You could start a new business with that money. Use the cash flow to pay back your bank and create even more wealth. Invest in real estate. Fund college. The options are limitless. That's why they call it the infinite banking concept. Another thing I want to impress upon you is this death benefit. We talked about that earlier. Now I'm going to go into it in more detail. You accomplish several things when you use infinite banking. You apply a banking function to your business. Your bank also becomes a savings account for money that can be used for any purpose, especially disability or emergency or whatever. It also serves as a supplemental retirement plan for you, all tax-free. But what happens if you never make it to retirement? You die prematurely. And you're self-employed or you have a small business. Do you really have anything to sell? If you stop working, do you just close doors and sell off some equipment? Or do you actually have a business that you can sell for a substantial amount of money? I don't know. But if you died here at age 50 in this example, and you're a man and your wife survives you, and she doesn't run the business, she's not involved in the business that much, what is she going to do? How can she run that business on her own? Is there anything to sell? Those are questions you need to ask yourself. Well, in this scenario, you don't have to worry about it because here's $2.3 million goes tax-free to your wife, and she can carry on. But it gets even better than this, folks. You see, in this scenario, we're not lending money, are we? We're not using this as a bank in this scenario. And over here in this scenario, we are using it for a bank. These cash values are substantially higher than in this illustration. When these cash values increase, so does this death benefit. So folks, you are using your whole life policy as your bank. You're loaning money out, you're receiving payments back, your cash value is going way beyond this, and what happens over here? Your death benefit starts going through the roof. And again, because we designed it with paid up additions, all this extra life insurance is paid up. There's no cost coming out of a huge portion of this this death benefit. No cost coming out. So you're throwing off pure cash. These cash values can get quite large, and this death benefit can get quite large. So it's possible that in year 50, this death benefit could be over $3 million. I don't know. But it would leave even more tax-free wealth to your family. So again, using the infinite banking concept, you provide a bank for your business, and even for yourself and your family. You have a savings account built in. Don't keep all your money at the bank earning 1%. Have it right here. You create a supplemental retirement plan, all tax-free. And you leave a substantial tax-free inheritance to your family. All this with one financial instrument. There is nothing else out there, Mr. Business Owner, Mr. Self-Employed, that would accomplish this for you. Now, this can be done with any numbers. I mean, you might only have 20,000, 25,000 cash flow, or 15,000, or you might have $1 million a month in cash flow. This can be scaled down or up any way you want. So the best thing to do is just give me a call or email me, and I'll get back with you. And let's get together and just run some numbers. That's all we need to do. Get some preliminary information, run some numbers that are specific to your business or to your family. We'll create an illustration that specifically addresses what you want to accomplish with your expenses and see what the numbers look like, and then go from there. But after this presentation, you probably don't want to completely ignore infinite banking and how it can apply to your business. As a summary, the current method $50,000 of expenses. You need to make $50,000 of deposit to cover it over a 20-year period. You deposit $1 million, you pay $1 million, you have zero balance. Or you can apply the banking principle using a bank account, a savings account with 1%. Works better than this method. You pay all those expenses, you're going to pay taxes on the interest, but you still end up with almost $1.2 million. Or you can use the infinite banking concept, save yourself $480,000 in cash flow, put that in your pocket. Still have a tax-free account balance of almost $840,000 in between your account balance and what you saved in cash flow. You have a total value to you of $1.3 million. Or like we said before, you can continue to contribute $50,000 all 20 years, and we don't know what these numbers will look like, but they'd be quite substantial. And added benefits, increase revenue and profit margins, become your own financing source for any major purchase. There's no risk, you have guarantees, no penalties for the use of your money, you have protection from the creditors, you have liquidity, use and control of your money, you have a leverage of your assets, you have collateral for all kinds of different loans, tax-deferred growth, tax-free benefit, tax-free access, disability benefits, and tax-free transfer to your heirs, all in one financial instrument. This is Victor Cuevas, Victor for Advice. I want you to own your life, not rent it. I want you to live debt-free and retire tax-free. I hope to be talking to you soon. I'm really looking forward to it. Thank you.